Well, as US earnings season comes in thick and fast, and with some heavyweight names still to report, we're just 6 days away from what is a small affair. That is the US election, and our market environment continues to evolve. We've got gold at all-time highs. We've got crypto mooning with the US dollar well bid, and we've got the NASDAQ and S&P futures looking like they want to go and test new all-time highs as well. But with landmines galore and plenty of event risks to change our market environment, the need to stay vigilant, diligent, and reactive is very much there for traders. This is the trade-off. Well, hi there, I'm Chris Weston from Pepperstone, and we're joined in 2 seconds by Blake Morrow from Forex Analytics. And we're going to be discussing all the factors that are evolving in these crazy markets, the technical factors, the fundamental factors, the thematics that are plaguing this market. And there's just 6 days to go till the US election. The market is becoming myopically focused on this very much key event risk to come through. So Mr. Blake Morrow, come into the program. Obviously, we discussed it at some length last week, the US election, but it's now just 6 days away. People are obviously looking at the trades that are shaping and the various proxies. People looking at the timetable around the event and what states are coming out, how a contested election may play out, how we can sort of trade that environment. Obviously, there's a lot of different permutations. There's a lot of other stuff going on in markets as well. But, how are you feeling at the moment? Are you sort of preparing yourself to go into battle, or, are you sort of just keeping a more calm mind?
I'm trying to keep a calm mind, although, we know that I'm going to give you guys a heads up. Next week when we film the trade-off, it's going to be the day after the election. And I can pretty much guarantee you I'll be living off of about 30 to 60 minutes of sleep the previous 24 hours. So I'm gearing up for that. I'm mentally prepared for it. Physically, I don't know how much, but that's what we're doing, is we're just kind of paring back and preparing for the inevitable, which is going to be a lot of volatility.
Well, it could be quite an interesting one, isn't it? I mean, obviously, you've got to take that time frame in, trade off the 30-minute charts if you're more of a swing guy. But, I think the need to make sure that you don't carry risk over when you're not in front of the screens, I think is going to be something that's going to be very important indeed. But let's go and explore those thematics. Let's go into Topical Thunder. Right, I want to talk about the debasement trades. I know it's a bit of a sort of a zero hedge kind of mentality, but, look, we have seen long end yields moving higher, in the US. And I think people are really looking at this idea about deficits and fiscal recklessness. It's become a much clearer theme. And the IMF put out its fiscal monitor report earlier in the week, which really just highlighted some of the fiscal issues that we've been seeing. Japan's running a deficit of 6% of GDP. They're talking about increasing a new supplementary budget in the government there. Obviously, people are very focused in the US with, the US running 7% deficits. And, if Trump comes in, and certainly if he gets a red wave, they're talking about, his policies potentially increasing the deficit by, another $7.5 trillion over the next 10 years. And obviously, this is quite a big concern for some people in the market, the idea that we may see a 1970s style revival in inflation coming through if all these stimulus measures are putting through it. Even, Kamala Harris is hardly campaigning on austerity, and, her measures, while she won't get a lot of them through Congress, should increase the deficit going forward. So people are saying, well, this is going to lead to inflation further down the line. And if Trump was to get a red wave, then you are going to see a significant increase in public debt. And so people are talking about this idea about hedging out that debasement trade, this idea about a future revival in inflation, this recklessness in spending. We've seen that in crypto, we've seen that in gold. And to me, this is purely the reason why we're seeing gold and crypto rally alongside higher long-term yields and real rates as well, and also a stronger US dollar. So I think it's that need to hedge out that recklessness at a government spending level that I think is causing these moves. So, obviously with the backup in yield, how much are you looking at this thematic, this idea about ballooning deficits and increasing debt going forward?
Well, I understand where the market's coming from, and I understand what's happening, as you pointed out, everything that's really spot on as far as what the market is concerned with. Yeah. As far as, trading it, and I think the world is going to change in 6 days. So in 6 days, what I'm doing today might not necessarily mean what I'm going to be doing 6 days from now. I mean, the whole world could really change, at least in the very near term. So I'm trying not to get wrapped up in it overall. And you know me, Chris, I focus mostly on FX. So you know, the dollar's rallied with yields. It's been a pretty mind-blowing rally. We're going to talk about some of those charts here in just a few minutes that I think really do matter. But at the same time, we've gone really far, really fast. And I think the dollar is going to be moving on different dynamics, like I said, in the next 6 days. And I think there's going to be a whole new playbook. But overall, in the back of your mind, I think you've got to be thinking, as far from a debasement type of trade, buy precious metals on dips if there's going to be a dip, and probably buy US dollar on rallies should you see some sort of significant pullback. And we'll be talking about what could potentially create that here in the next 6 days or so.
Yeah, no, I think it's a really interesting one. Obviously, that thematic, that thesis that I just talked about, is a slow moving ship. It's not going to happen overnight, but the market will sort of try and price this idea that, you know, this massive amount of fiscal coming into the market from the US and other governments as well will require a significant amount of issuance from the Treasury Department to fund that. And, you know, with the private sector expected to take down that increased supply over time, with the Fed, you know, unless they sort of come back to do quantitative easing, you know, that they're going to demand high yields, and so that the Fed will be in a rock and hard place. And I think that's kind of a really interesting situation. If we were to see a pickup in inflation expectations as a result of stimulus, I think that would be a really bad thing. And I think so. Therefore, yeah, we are looking at market-based levels of inflation. And if they were to start rising in the months ahead, I think that could be significant for markets there.
I agree with that, Chris. And that's something, like I said, once we get past, let's like fast forward 2 weeks from right now, we're going to be thinking about this. And I'm sure we're going to be talking about it here on the trade-off. So make sure you guys are here each and every week. But I want to fast forward and go to the next topic, Chris, because we do, before this election and this week, we do have the Bank of Japan, which is meeting now yesterday. It feels like yesterday. Last week, we talked about the political environment in Japan and about Ishiba did end up losing a majority. I want to say Kishida, whatever the Kamiko, trying to think of the other party that they were going to form a coalition with. The leader stepped down. He's looking to maybe form a different or a fuller, a bigger coalition, or maybe even trying to lead Japan by himself. But the problem that they're finding with the yen is weakening as a result, taking the dollar yen towards 153.50, 153. As the Bank of Japan's rate decision is coming up here this week. So I guess I'm going to ask the question, what would WWCW do, which would be Chris Weston? What would you do if you were the Bank of Japan? And I want to ask you this because is this yen weakness that you've seen in the markets, is that the Bank of Japan's now seeing, is this an opening for them to be a little bit more hawkish instead of leading the road down, leading the market down the road of the path of not raising rates anymore in 2024, but being maybe even more aggressive in the beginning of 2025? So I guess I want to ask the question is, what would Chris Weston do? CC.
When I saw that, I thought that might be some sort of like sporting thing to show form, win-win. But no, obviously, yeah, I got that. Yeah. What would Chris Weston do? Well, I'm clearly not intelligent to be running a central bank, but I think for now, the question is what I would do. There's always the question of what should they do and what will they do, and so you get yourself into the mind of what will they do, and they'll obviously leave rates unchanged at this meeting, and I think there was a debate whether the December meeting could be live in the sense that could they raise another 10 basis points there. I don't think they will. I think they'll raise rates in January. That's kind of the sort of base assumption that I've got. I think that's kind of the base case of the market, that we'll get a hike in January. But yeah, I think you make a really, really good point. This weakness that we're seeing in the yen now on a trade weighted basis, and also dollar yen pushing into 154. The higher that goes, obviously, the more likely that will spur them on to raise rates, because they just don't want to start importing inflation in that situation. So I think, what's the line? I mean, I don't think it's here. I think the line for the Bank of Japan to trigger, some sort of tightening process. Obviously, there's two things: do they raise rates, or do they intervene in the FX market. Well, they're certainly not talking about intervening at this stage, and the rate of change is not prolific enough at this stage. So, I think probably the more likely situation is that they look to hike on the back of this. And I think you're probably looking at closer towards 158, 160 before they start doing that. So I don't think they're at those levels at the moment, even though Oada was fairly hawkish at the IMF meeting this week. So, but we're not there yet. And, what's a 10 basis point going to do when, rate cuts are being priced out of the US in quite emphatic style at the moment? So I really like dollar yen higher. Obviously, if we were to see a Trump presidency, obviously, if we were to see a red wave, you could be looking at 160 in dollar yen fairly soon, I reckon. So it's an interesting point, but I don't think they're going to do anything today. We do get new economic projections on tomorrow. So we do get new economic projections, and the government is still talking about, when they try and forge something together, creating some sort of supplementary budget, which is a bit of a disaster, to be honest. Sort of feeds into that reckless trade when they've got deficits of 6% of GDP, and the Bank of Japan are no longer buying bonds in any kind of size. So, look at the government bond market, the 10-year JGB. It looks like that's ripe for further upside. But I think January, and it's a really good point you make. What is the level that they may start to hike? I don't think it's here. I think 160, 158, 160 is probably the better level there, Blake. Anyway, let's go into the event risk. We talked about the Bank of Japan there. And I like dollar yen still further higher. It's consolidating at the moment, but I think it breaks, and I'll be chasing that. But yeah, Blake, we are coming into a 2-week window now where event risk is about as mad as we're going to see, really, aren't we? We've got, payrolls on Friday, going to be a bit muddied by the hurricane and ports issues and various factors. Manufacturing numbers, we've obviously got the election, we've obviously got, the payroll, we've got the Fed meeting, we've got the NPC meeting in China next week, which I think is going to be a big deal. Obviously, we're going to get the finer details of their stimulus package. They're talking about a 10 trillion yuan stimulus package there. Obviously, we've got earnings coming in thick and fast from a number of heavyweights. Apple coming out this week, Microsoft tomorrow. It's crazy, crazy days. They need to be vigilant, dynamic, open-minded, and react to prices there. Have you seen a week like this for a while?
No, I haven't. And then knowing how non-aggressive you can be going into the election, which is on Tuesday. But, I also want to point out, Chris, that we do have the Fed's favorite inflation gauge coming up this week and on Thursday. So on Thursday, we have the PCE, which is, everybody's kind of pushed inflation off to the side until literally over the last week or two. And they're starting to talk about another surge of inflation. And that PCE number, I think, is going to be a big number. And you're right. We have ISM data, but it comes after the payrolls report. So we have ISM manufacturing data actually on Friday afternoon, and then going early into next week. I did see there was something that is also happening because we have the UK budget, which is less than 12 hours away from right now, from the time of filming. And then we have the Bank of England next week. And then we have the Fed following the election on the 7th. So what's the Fed going to do, 2 days after the election? How do you think they're going to be?
It's crazy, isn't it? And you've got the Chinese NPC meeting, which is was supposed to be this week, and they've pushed it back until next week. And I think conveniently, it's between the 4th and the 8th. So one suspects that they're going to wait to see exactly what happens and come out of all the details probably on the 8th, a few days after the election, we know the outcome of the election by that point, because they'll be able to be reactive. And if we were to see a big move up in dollar CNH or offshore yuan and move down in equity markets, they'd be able to counter that move with some hard hitting rhetoric. So I think that's quite a tactical play. I think the budget in the UK is an interesting one. Look, I try very, very hard not to look at budgets in it from any government, to be fair, but this one is a little bit different because I think this is a generational budget from the UK. And in this world where the US Treasury Department, the government there, have got absolutely no interest in going to an austerity measure. Any government that comes in and reduces the deficit is going to lose the next election. You're going to see an approval rating lower than Keir Starmer's. So that's not changing. Japan, we talked about, but France is doing something about it now. They're actually looking, they're kind of having to because of credit ratings, and they're putting constraints on their budget, capping spending and reducing spending. But that's the same in the UK now. Their fiscal position or deficit is not as bad as the US, but they're now having to come out and put measures in as well, which may be at the expense of growth. So that's a hard budget. So I think they're going the opposite way in some capacities. But I think this is a budget where we would usually not look at it at all, and it wouldn't be market moving. But I think this one has the real potential to impact the gilt market, and obviously by extension the UK there. So that's an interesting one. Let's go into the US election. Sorry.
Yeah, let's do it. I was just going to say there's the first UK budget and labor budget in how many years? You would know.
I had to say like 19. I can't remember, to be honest.
So it's in the teens. It's in the teens. It's in the teens. Yeah, it's in the teens. I know it's quite some time. Hey, okay, let's I know we prepped everybody that we will be talking about the elections this week, and we're going to be talking about it next week as well. But I kind of want to put in the final word here, because the next time we meet is going to be post-election. We're going to be trying to figure out who won, probably more than likely. And I don't know if we're going to have a clear picture. So I asked the Forex analytics team, all the analysts, and everybody's kind of putting together, they're cobbling together their just brief thoughts, brief overview of the market, how they feel. And I wanted to kind of voice mine here, and then, take your opinions. One of the things that you talked about last week, Chris, one of the topics was what's being priced in. Obviously, unless you've been sleeping underneath a rock, you haven't seen Bitcoin surge above 72,000. It is literally nearing all-time highs at 74,000. It's getting very close. Gold's been ripping. The dollar Mexican peso is threatening to break out, and that's a weak Mexican peso. Strong dollar is a Trump trade. I mean, right now the Trump presidency is being priced in. If you look at the betting markets, his rating or his odds are almost as high as the day that he had the assassination attempt on him. So we see, the dollar rallying, bonds selling off, yields rallying, cryptos rallying, Mexican pesos selling off, gold is rallying, and all of this is being priced in. But my opinion is that we will and are at high risk of a buy the rumor, sell the news Trump event. Now, that doesn't necessarily mean for everything, though, because I believe that equities have rallied into this. And who wants to sell stocks right now? Everybody's like, I'm going to sit in the stock market because if Trump wins, which I think he's going to, next thing you know, S&P is at least 6,000, if not 6,500. So I'm not selling. So I think the stock market or risk has the opportunity to buy the rumor, sell the news. But I don't necessarily feel that about the dollar, because the dollar will be strengthening probably on, tariffs, worst case scenario. But if, as you pointed out, if there's a red wave, there's going to be a lot of other things that he's going to be able to push forward that's going to be probably dollar positive. Flip side is a Harris win, I believe, gets us the biggest reaction, but it's also going to be a negative reaction for Harris in the stock market or in risk. I think the dollar will sell off initially, but then I think it's going to firm up. Sorry, I just almost took up all the time, but I think it's going to firm up if there's some risk aversion. So that's in a very big nutshell, that's kind of what I'm thinking about as far as the elections go. And I know I took up a lot of time, but we need to talk this out. Chris, what are your thoughts as we head into this election next week?
I think you spoke, you nailed it, to be honest. This idea about buy the rumor, sell the fact is not something that's getting discussed enough, I don't believe. It's difficult to know where to start with all this now, to be honest, because, how much is being priced in? You've got to think that gold's pricing quite a lot. That's a well-owned trade now. Crypto's doing something similar. It's difficult with the dollar, though, to be honest, because a lot of the move has just worked so concurrently with better data and the reduction in rate cut expectations, and the backup in long end yields. And so how much of that has been driven by Trump expectations or just better data? And I'd say most of that is better data. So I think the dollar's still got some way to go. I think the Harris win, she's going to get a split Congress if she does. Then, that's an easy trade. That's easy to, your dollar's going to take that initial hit, and then it's business back to looking at payrolls and, all those other factors. I think you can get a modest reaction in the dollar on a Trump win. But I think, one of the things about fiscal that everyone sort of is missing is, he can put tariffs up on existing goods without the blessing of Congress. If he was to get a red wave, then he can go much, much harder on tariffs. He can only go hard on tariffs to a limit. With a red wave, he can put them on a much broader base of goods in a much harder fashion. And he would need to, because if he was going to go and do tax cuts, if he was going to go and do an extension of the Tax Cuts and Jobs Act and increase the deficit by $7.5 trillion over the next 10 years, he'll need to find revenue from somewhere. And he's talking about lowering income tax or getting rid of income tax and replacing it with tariffs. That's not going to work. So tariffs would ultimately have to be a revenue driver, which you'd have to make them much bigger than what people had anticipated and go really hard. So I think that's a really interesting fact, is that you can only go so far with tariffs. So that would be a modest dollar positive. And I don't know if we're pricing in the full extent of that yet. But I think the red wave is the one where you get a big market reaction, to be honest. And I think if Harris wins, then obviously you just get a lot of that positioning unwound very, very quickly. But for me, the biggest other issue that everyone's looking at now, Blake, and I'll wrap it up here, is trying to understand the times of this. Are we going to get something that comes out traditionally like about 11 p.m. Eastern time that night, or is it going to be something that's going to be contested? And I think it will be contested. I think there will be some key swing states that will be contested because they're going to be so tight that Harris or Trump will contest them, and that could just delay the process. And of course, until we know the facts and one of the networks calls it, then we're going to be in that hiatus, and that could be some big volatility. So we'll wrap it up there. I think timing is something that we need to look at very closely as well. Anyway, let's go to the charts that matter. Let's go to that's a setup. Well, I'll start this off. Bitcoin, Bitcoin. Right, obviously we just talked about it. I mean, it's been the trade of the moment. The whole sort of crypto complex has come alive, and what was a bit of an outlier trade, and some people had been positioned for this kind of recklessness, this debasement trade, has turned into one of more of a momentum trade now. So that brings in the day traders, that brings in the short termists. A lot of people have been buying Bitcoin, and you've seen the inflows into the various ETFs. They've been, well, really since about 11th October, they've been some very, very high inflows into the ETFs. That's been driving. Last 24 hours, though, we've seen big inflows in through the exchanges. Volumes are about 60% above average. Big volumes through the futures markets as well. This isn't just a basis trade. This is actually people looking to chase now. So a bit of optionality as well. Dealers are short gamma, so your price moves up. It trades through it goes towards the strike, and dealers have to hedge by buying the underlying Bitcoin futures. But it's breaking key levels. I think that's really all you need to know right now. So there's not a lot of markets that trend better than when this wants to go. It absolutely goes. The sell side just dries up. The buyers push price up a lot easier. So the question we've got to ask ourselves is, are we going to see new all-time highs? I mean, I think earlier today we were about 300 points away from an all-time high, which is just a whisker. But the debasement trade is now turned into more of a consensus momentum trade. And I'd say that we probably get new all-time highs. Obviously, if Trump was to be president, having the most important person in the world as your backer and wanting to make US the crypto home is also very important as well. So this is a momentum trade. It has the underlying thematics of debasement and recklessness and all these factors. But I think people are chasing this now, and I wouldn't be surprised if we saw all-time highs very soon.
Whew, man. And just so everybody knows, my technical targets would be about 105,000 on a big breakout. So it looks bullish. All right. I want to turn your attention to my first setup, which is the 10-year yield. This is what we call an ascending wedge, Chris. And I had a macro analyst that I have a lot of respect for. He came out today, or maybe it was a couple of days ago, but a recording of one of his interviews said, bonds are uninvestable. And then all of a sudden we got this really big bounce in the 10-year today.
You heard what Paul Tudor Jones said as well. I mean, we're probably one of the best hedge fund managers ever lived. He said he wouldn't be touching US treasuries. He would be selling out of them. So I think that caused some ripples as well.
Yeah, I mean, and we've seen some really big moves. Fixed income sold off, yields have rallied, but we've got this reversal candle, and we got a reversal signal with an ascending wedge. Now the ascending wedge, bearish outside day, or you could call this a shooting star, actually, this particular candle, but we had actually a hammer on the 10-year, the ZN, the 10-year notes contract that trades on the CME. Anyway, we stopped at 161% extension of the last leg lower in an ascending wedge just before a lot of risk. So I think there is risk that we pull back towards the 200 DMA. I think we're going to find our footing ahead of the election, but I think there is near-term pullback at these levels. So that's my first setup for today, Chris. Yeah,
right. And of course, I mean, I wouldn't be surprised after the move we've been seeing in yield, and obviously things like term premium has become quite positive. That's an influence on the bond market. you know, it's not just the rate situation, but yeah, obviously with this big data deluge that's coming through, yeah, I wouldn't be surprised if the market that's progressively short, you know, starts to tighten it up a little bit and close some of those shorts, and that could bring yields down and run a more sort of flat position into the election. Yeah. Anyway, let's go to my next one, which is sterling against the Aussie. I'm torn against this because I'm a bit of both, to be honest. But like right now, yeah, the market is long and strong of sterling against the Aussie. You know, I am saying this, well, an hour and a half before Aussie CPI comes out, and we are expecting the trim mean measure, which is the one you want to look at because the headline number is going to be heavily distorted by energy prices and falling energy prices. But, you know, the trim mean number is the one the RBA set policy to and look at much more closely, and that's expected to drop to about 3.6%. So it's still well outside the RBA's target band, but it's sort of obviously going in the right direction. So it's difficult I'm not going to make a prediction on where this price goes until you get that out of the way. Obviously, we've got the UK budget. And regardless of people what think about the gilt remit and you know how austere it's going to be, cable is looking pretty strong at the moment, or the pound is looking pretty strong. So yeah, sterling quid is is back at the range lows. I think that goes lower. Sterling Kiwi, sterling Aussie, the pound's looking quite nice. It's only against the dollar that you're not really seeing those major flows, and sterling yen is looking good. So I like this pair right now. You've had the breakout, if you see, of obviously that well-defined range high. Pullbacks are a buying opportunity. I wouldn't touch it right now until we get both the budget and the CPI number out of the way. But if it gives me a little bit of pullback and the news isn't completely daunting, then I'm a buyer of this. I think the trend goes higher.
All right. Well, Chris, my last setup here is going to be the dollar Swiss, which is up at the 38% retracement. And you can see right there, we're at a very pivotal level. And you notice that my right at the bottom of the screen, it says 12 years. Did you know Jordan, Swiss National Bank Jordan, he was actually at the helm of the Swiss National Bank for 12 years. I didn't think that much time has passed, but yeah, we have a new Swiss National Bank governor, Martin Schlegel. He took over and he spoke today. He talked a little bit about, being ready to be quote unquote active in the currency markets, meaning, go ahead and put some upside pressure on the Swiss franc, and the Swiss National Bank is ready to step in if they need to. And he says negative rates are also in their toolkit as well. And he is expecting further interest rate cuts will be needed in the months ahead, even going into 2025. So he is saying a lot of different things. He's actually going to be speaking tomorrow morning or later on in your day. He's going to be speaking at an event that's hosted by the Swiss National Bank as well. But as you can see, Schlegel's he's in charge, and he's looking to make his stamp on the Swiss National Bank. And you can see we're at a 38% retracement. I just showed you what was happening in yields, and if yields start to come off, one of the more yield sensitive currencies is going to be the dollar Swiss. So I think this is going to be a very pivotal level that could play to the upside, maybe post election, maybe even play a little bit to the downside near term if yields continue to come down. So there's my second setup of the day.
Like it. And if you look at the bank reports as well, there's been quite some big outflows of Swiss franc. It's been one of the most heavily sort of shorted currencies of late. So I think there's a reason for that. I think this goes higher as well, but obviously that comes with risk on the dollar side. Anyway, let's go to play of the day. Well, my play of the day today, Blake. I'm staying in this crypto theme. I know we sort of center around certain asset classes at times, but I'm really looking at what I'm seeing here on this chart. I love it. I think it just looks beautiful. I mean, you've seen the flow of capital. We've made a high. We've had a very small pullback. We retested the former breakout. We've used that as a springboard to sort of move back into sort of 179, 180, and I think we break it. So I'm long now, and I'll be adding on the break and a close above the break. I think we get there. So, there's a lot of things that are going on within Solana from a sort of technical perspective that can increase the usage and the transaction rates and various factors. I'll leave those to other people, to be honest. What I look at in these cryptos is behavioral economics, behavioral finance, and really just the flows that you can see and the aggregation of demand, supply and demand. That tells me kind of everything I need to know about the risk and the probability of future direction. And right now, it's moving up, had a bit of a pullback. We're back testing a ceiling. It feels like the weighted money wants to chase this one higher. I'm long in smalls. Would look to add on a break of 180. I'm not going to give you a target because I think this kicks, but I like this one higher.
All right, Chris, man, you are sticking with the crypto theme today. That's for sure. All right. Well, I'm going to go back to something that I talked about a couple of weeks ago, and I'm going to go back to the dollar yen. This is going to be my play of the day. Now, I just so you guys know, I was actually on the short side of the dollar yen as we were approaching 152. I took that trade off for a loss. I talked about it on the week ahead video that I do for the Forex analytics traders. But, following this election this weekend, and seeing that the dollar yen keeps stalling at this 618 retracement, and you'll notice I have it on a 4-hour chart. And you notice I talked about yields a little bit earlier. I think yields are going to pull back a little bit. I think the dollar has some room to pull back. I think the dollar yen could pull back below this ascending trend line or ascending wedge support, which comes in. Basically, got to wait for that gap fill to completely. It's already filled at 152.40. It breaks below this week's low. That is the place where I think you have to look for shorts. But for me, I'll be actually adding to shorts, looking for a move back down towards 150. Now, Chris, I know you like this on the long side. I don't mind this on the long side post-election. But between now and the election, which is now and next trade-off, I think we could get a little bit of a pullback. And remember, the BOJ is in play in just about 24 hours from now.
Yeah, I like this higher, but I think you're right. I mean, we're at a very key juncture here. This needs to kick, and if it kicks, I'll be chasing it. But I wouldn't be looking to take positions right now. And I want to see the market show that it's prepared to take it through these resistance levels, through the supply, and that would give me confidence that this move can continue to kick. I think right now with the setup that you've got there, the overhead resistance that we've got, I think the market, the bulls need to show me that move is there for chasing. Otherwise, I wouldn't be involved. So I think it needs to play out, and let the price action dictate the trade. So I look at it. Okay, well, thanks, Blake. Next week, it's on. It's on next week, and we thank you everyone for watching the show. We'd love to see how you're. I know a lot of people out there are sitting there going, "Oh, election this, election that. We don't want to see it. Get out of the way." Absolutely, we echo those thoughts that we can't wait to get a normal trading environment, so we don't have to deal with the noise and the headline risk. We can get back onto watching more sort of structural capital flows, but it is what it is, and this is a major landmine that we all have to navigate. So let us know how you're feeling about it. Let us know the trades that you like, how you're managing risk around this, the sort of position size and all those factors. Love to hear you, but we look forward to next week for what will be a massive week in the markets. See you then.